Hello everyone, talking Metaplanet again today because I'm so giga bullish on the stock, I can't stop talking to people about it. It is Casual Friday, I apologize for the lack of orange tie, but you know what, it's fine. The information will still probably be helpful. So this news is a couple weeks old now. That said, I still want to dive into what this means for the capital raising that Metaplanet could accomplish with a new subsidiary located in Miami, Florida. Let's start with the geopolitical chessboard. On May 1st, 2025, Metaplanet quietly filed paperwork in Florida to incorporate a wholly owned U.S. subsidiary called Metaplanet Treasury Corporation based in Miami. The initial seed capital is $10 million. The authorized raise ceiling is up to $250 million, and the use of proceeds is to buy Bitcoin and only Bitcoin. This is not a side fund. It's not an exploratory arm. This is a 24/7 hard money conversion engine planted in the beating heart of U.S. financial infrastructure. Let's zoom out. Why Miami? You might ask that question. Florida offers a 0% state income tax, which alone makes it more financially competent than half of Western Europe. It runs a fintech sandbox that allows regulatory innovation and flexibility unheard of in places like New York, California, or Canada, where compliance officers outnumber brain cells. And most importantly, it has an explicitly pro-Bitcoin legislative framework backed by state-level legal protections for Bitcoin custody. That also includes commercial payments and corporate asset allocation. This is regulatory arbitrage in real time. Metaplanet has effectively shaved 30 IQ points off its cost of capital by relocating legal infrastructure to Florida. And if you're wondering about time zones, a Tokyo-Miami treasury duo is now in place. Yes, they built a relay team across hemispheres to convert capital into Bitcoin around the clock. There are Bitcoin miners with less uptime than this treasury team. So while most of the Japanese companies are still trying to figure out how to hedge currency risk, Metaplanet is running ops in 2 countries, 2 jurisdictions, on 2 continents, and with one objective: siphon as much capital into Bitcoin before the rest of the market wakes up. Now let's have a look at the depth of capital math. Metaplanet's Japan operations gave them a taste of institutional capital, but Florida puts them face first into a U.S. liquidity inferno, the single most saturated, leveraged, and reflexive capital pool in the history of humanity. Here's what it looks like. 29.11 trillion in assets under management as of January 2025. If Metaplanet captures 5 measly basis points of allocation, that's 1.46 billion. That's nearly 6 times the entire Florida subsidiary's raise ceiling from just one capital bucket. Let me say that again. A 5 basis point breeze through the mutual fund sector gives Metaplanet a financial hurricane. They're not trying to own the pool, they're just trying to dip a toe in. Now, if Metaplanet could somehow just capture 0.1% of those year-to-date inflows, that's $361 million. I know that seems like a big number, but what I'm trying to illustrate is how little of capital they have to access to have an outsized effect on the performance of the company. Do the math, that's an extra 3,470 Bitcoin at today's 104K price, and that's more than half the total Bitcoin Metaplanet currently holds from passive allocation drift alone. We are going to witness the reflexivity trap of ETF capital flows, where Bitcoin beta microcaps can grow just by existing in the right jurisdiction. The U.S. investment grade bond market has roughly 11 trillion in outstanding issuance. This is the prime venue for issuing zero coupon or Bitcoin linked notes in large blocks using institutional rails and custodial USD infrastructure. So what does this mean in English? It means that Metaplanet just got invited to the poker table and Florida handed them a stack of $100 chips in a fake name. They can now raise in size, on terms, and with the flexibility that the Japanese market just can't replicate. But more than that, they're now time zone synced with the ETF market makers, the over-the-counter desks, and underwriters who actually move capital. This is what it means to be plugged in, and yes, this is all before they've raised a single dollar from U.S. investors. Let's talk Bitcoin per share accretion scenarios. The current state of play is 6,786 Bitcoin on the balance sheet with 553 million issued shares. Assuming coin price of 104,000, that's 1,229 sats per share. That's your current signal. Now watch what happens when the capital gets weaponized. So if Metaplanet raises 250 million in capital, that allows them to acquire 2,404 Bitcoin. That would bring their total stack to 9,200, 1,663 Bitcoin per share. Sats, obviously those are sats per share. So if they raise 250 million and they acquire 2,404 Bitcoin, that would bring their stack to 9,200 Bitcoin, increasing their sats per share by 35%. So from 1229 sats per share to 1663. With 500 million raised, you're just going to double that, obviously. That would give you a 71% increase, 2,000 sats per share. Now, if they're able to raise about half of their current market cap by tapping the US capital pools, which I see no reason why they shouldn't, they could easily acquire 9,615 Bitcoin, increase their sats per share by 141%, and end up with 2,967 sats per share. To get to their capital target of 21,000 Bitcoin by the end of 2026, they only need 14,204 more Bitcoin. I think that they're going to smash both the 2025 goal and the 2026. Let's highlight a few things here. A fully subscribed $250 million raise would increase their Bitcoin per share by 35% instantly. No product launch, no quarterly execution risk, just capital into Bitcoin and then accretion. A $1 billion capital stack, which is about half of their current market cap, which I think they could totally raise with the inflows from the US capital markets. That would turn them from a micro cap into a Bitcoin vacuum, absorbing over 3 weeks of global miner output. This isn't just a cap table math trick, guys. This is a float compression in disguise. Metaplanet is just going to weaponize so much scarcity. They're going to front run ETFs, tightening the float. They're going to force other companies, Japanese, Korean, whatever, to chase shrinking supply at a higher cost with weaker balance sheets, and that's capital warfare. So here's the game. As Metaplanet acquires more Bitcoin, its Bitcoin per share rises. In bullish phases, that creates the MNAV premium. When the MNAV is going to be above 1, which is historically the case with this stock, they're going to unlock their ATM equity shelf, issuing new shares above the NAV and convert the market premium into more Bitcoin. More Bitcoin equals higher Bitcoin per share, equals smaller discount, equals more issuance, and then even more Bitcoin. This is the looped accretion. Strategy has done this to stunning effect. They issued billions in equity with zero dilution drag, purely because investors are willing to pay more than fair value for exposure to the flywheel. There is a point where the flywheel stops being abstract and starts breaking markets. Let's say Metaplanet raises $250 million and deploys into Bitcoin in 48 hours. That absorbs 5.3 days of post-halving miner issuance. To ETF market makers, that is the signal that there's institutional conviction, there's execution velocity, and there's real balance sheet pressure on the available Bitcoin float. And you have to remember, you're seeing another Bitcoin treasury company pop up every other day. You're watching the scarcity be weaponized in real time. And when that happens, the passive capital herd just moves in. Momentum ETFs, quant overlays, thematic long-only funds. They don't need a reason. They just need a signal. And Metaplanet is going to become that signal. There's an obvious cost of capital inversion going on too. That's making the bond guys sweat. But Metaplanet's potential to issue zero coupon or preferred instruments at sub 2% real yields while buying Bitcoin, which has compounded at 150% compound annual growth rate over 10 years, that's creating a negative real yield cost of capital. In plain English, they're being paid to go long Bitcoin with other people's money. And then the regional game theory is taking place right now. They're not just building their balance sheet, they're building pressure on every other treasury in Japan, Korea, or Southeast Asia, because once Metaplanet starts tightening their float and it's raising their Bitcoin per share visibly, the other firms are going to be forced to react. If they don't, their capital is going to become structurally weaker, their shares become relatively less Bitcoin exposed, and their cost of capital rises. This is the corporate treasury game theory in action. It's a prisoner's dilemma where the only winning move is to buy Bitcoin before your competitor does. The tighter the float, the higher the price, the faster the reflexivity, and we're no longer in the realm of equity markets anymore. We're in capital arms race mechanics. Yes, this thesis is powerful. Yes, the math is surgical, but this is not without execution complexity. This isn't a Metaplanet thing. This is more of a GameStop thing. If, people are waiting too long to buy their Bitcoin, but if you're going to raise cash and you wait too long to deploy the Bitcoin purchase, the volatility is going to punish you. The obvious fix is that Metaplanet's now running a Tokyo, Miami treasury desk that's 24-hour coverage across both hemispheres. On top of that, the corporate bylaws have been updated to allow same-day Bitcoin settlement post-raise. So no more idle cash and no more death by delay. You can ask, what if Florida goes anti-Bitcoin by next election cycle? But this is brilliant. Metaplanet uses dual custody, a New York licensed trust and a Wyoming SPDI charter. That gives them regulatory arbitrage within the US. If Florida flips, the Bitcoin doesn't vanish, it just relocates. Metaplanet is really playing jurisdictional chess, and this is a really well thought out move. They're not playing blackjack. There's NASDAQ uplist hurdles. they're still on the Tokyo Stock Exchange and US capital prefers domestic vehicles. But the fixes, a reverse split, public float expansion, and gap profitability path are all in motion for fiscal year 2025, probably Q3. This is a structured uplist roadmap to plug into US liquidity directly, and once it's uplisted, you can just expect the ATM shelf to get a lot more action. And then, of course, Bitcoin could always draw down post-raise. What if they raise $250 million and Bitcoin drops 30% overnight? They're pre-funding volatility budgets using Bitcoin derivatives. In other words, even their hedging strategy is Bitcoin native. They're not fearing the volatility. They're actively monetizing it. Let's call it what it is. Metaplanet's Miami subsidiary is not just another corporate entity. It's a capital siphon disguised as a treasury desk with a singular purpose: convert the dollar's decaying time value into a permanent Bitcoin reserve before anybody else can. In doing so, Metaplanet completes its evolution from a regional tech firm into a US-grade Bitcoin vacuum, capable of weaponizing every form of fiat capital, bonds, equity, preferreds, and private notes, all redirected into Bitcoin. What this move is really achieving is, they can have a 35% boost to Bitcoin per share. They can make their Bitcoin denominated equity flywheel visible in real time. But this is really a signal event for ETFs and institutions chasing beta. It's proof that Asia can field its own Sailor style treasury stack. Here's what Wall Street won't tell you. The moment Metaplanet converts $100 million into Bitcoin under the US regulatory umbrella, they're planting an economic flag in the center of the largest capital market on earth. And there's nobody in the world, not Japan, not the SEC, not an ETF desk, can unring that bell. Because Bitcoin on corporate balance sheets is not about the number go up. You're missing the forest for the trees. It's about the cost of capital going down permanently. And that is the ultimate game: to issue fiat debt to buy the one thing that can't be issued. That is the Metaplanet thesis. If you're a high conviction investor looking for asymmetric Bitcoin exposure with 24/7 treasury execution across Tokyo and Miami, access to US bond equity and ETF inflows, built-in reflexivity that forces other firms to buy, and an MNAV machine designed to compound Bitcoin per share over time, then Florida is not a geographic launchpad. It is a geopolitical ignition point for a new class of corporate Bitcoin predators. The fiat system taught corporations how to optimize for debt. Bitcoin teaches them how to optimize for durability. Metaplanet got the memo. Florida is the opening move on the chessboard, and the rest of the board is still theirs to take. And if they succeed, this stock is just going to go to the moon. I'm sorry, folks. It just is. The math is there. The Bitcoin per share. The capital they can touch. To me, this is a no-brainer, but remember, this is not financial advice. This is financial entertainment.